The U.S. auto market entered a steady downward trend starting in 2016, a contraction that accelerated under the intense economic pressures of early 2020. Yet, against this backdrop of industry decline, Kia Motors America achieved its third-best yearly sales performance in company history. This chart shows the contrast. While overall market volume dropped, Kia's total car sales grew by 4.4% and reached a milestone of over 600,000 total vehicles in 2019. This table identifies Kia's new position in the competitive hierarchy, where it now stands as a top 10 nameplate in the United States. To reach that tier, Kia overtook several American legacy automakers, including Buick, Dodge, and Chrysler. The brand's total volume even surpassed Tesla. This high-profile disruptor specializes in electric vehicles, making Kia's traditional market penetration highly significant by comparison. This growth reflects a calculated capture of market share during a window of competitor vulnerability. To understand the surge, we have to look at the quality of revenue. This corporate finance metric distinguishes high-margin, sustainable sales made to individual consumers from low-margin, bulk sales dumped to rental fleets. Kia's overall growth was driven by genuine consumer demand, with retail sales jumping 7.4% in a down market. This diagram illustrates that divergence. While retail sales climbed 7.4%, Kia simultaneously reduced its fleet sales to their lowest volume since 2014. How did Kia reform its product portfolio to trigger this specific surge in individual retail demand? The 2019 data indicates a measurable shift in brand desirability among individual consumers. This table displays the 2018 and 2019 USA sales mix. In 2018, the brand relied heavily on a Power 5 lineup: Forte, Optima, Soul, Sportage, and Sorento. These represented 85% of total sales volume. By 2019, reliance on these legacy models dropped to 77%. This 8% concentration drop marks the successful expansion of the brand's total portfolio. The primary driver was the Telluride, a mid-size crossover SUV that instantly captured 9.5% of the total mix in its debut year. The Telluride allowed Kia to broaden its revenue base while maintaining its record-breaking overall volume. The foundation of Kia's volume remains the economy and compact segment, consisting of the Rio, Forte, and Soul. The Soul held its position as Kia's best-selling car of 2019, narrowly outselling the Optima and Sorento. The Forte also served as a major structural pillar, despite a minor percentage shift from 17.3% down to 15.5% in the mix. These compact models provide a high-volume, reliable defensive hedge during periods of economic instability. This economy segment remains the stable foundation that funds Kia's higher-risk ventures in the SUV market. Within the SUV and crossover block, the Telluride created a significant supply-demand imbalance. Consumer demand for the model outpaced dealership supply for more than 11 consecutive months following its release. This growth wasn't limited to one model. The ever-popular Sportage posted its best-ever annual sales for the second year in a row. The Sportage climbed to a 14.5% share of the total sales mix, showing deep brand strength in the utility category. Kia's retail surge demonstrates the dominance of SUVs in the brand's current sales mix. However, the data also reveals a failure in the luxury and premium segment, which houses the Stinger, Cadenza, and K900. While some industry logic suggests high-volume brands can easily move into premium markets, consumer data indicates a rejection of Kia's luxury entry. Returning to the sales table, the premium capture is microscopic. The K900 represents just 0.1% of the mix, and the Cadenza only 0.3%. Even the high-performance Stinger, alongside the Cadenza, actively lost market share year over year. Kia's growth relies on utility and value. This premium market penetration currently drains corporate resources without contributing to overall success. This diagram plots a strategic matrix for future capital. The x-axis represents market momentum, and the y-axis represents total portfolio share. The luxury segment falls in the bottom left quadrant, low portfolio share and negative momentum. The economy segment occupies the top left quadrant, high portfolio share but stagnant momentum. The SUV and crossover segment dominates the top right quadrant, high portfolio share combined with explosive growth momentum. This suggests a clear reallocation of capital away from stagnant segments and into high momentum growth. Three strategic mandates emerge from the 2019 data. First, Kia must scale production capacity for the Telluride to capture its unfulfilled demand backlog. Second, the brand must protect core economy models, the Soul and Forte, as a defensive buffer against potential economic downturns. Third, Kia should divest R&D and marketing capital from the failing Cadenza and K900 lines. This capital is required to fund further expansion of the profitable SUV footprint. Kia's 2019 performance reflects a product mix that finally aligns with the reality of U.S. consumer utility demand.